advisors, I welcome you all to the conference call of Digikore Studios Limited. From management side, we have Mr. Abhishek Moore, Managing Director. Now, I hand over the call to Mr. Abhishek Moore. Over to you, sir.
Thank you, Janni. Good evening, everyone. My name is Abhishek Moore, and I'm the Managing Director of Digikore Studios Limited. Along with me from Digikore, I have Ms. Heni Pahuja, Ms. Sureka Missal, and Mr. Srinivas Bede as well joining this call from Digikore. So, welcome to the H2 and FY2024 earnings conference call for Digikore Studios Limited. It's a pleasure to have each of you here today as we reflect on the significant accomplishments and advancements we've made during this period. Before we delve into the specifics of our performance, I'd like to provide a brief overview of Digikore Studios Limited. At Digikore, we take immense pride in being one of the leading technology-driven visual effects studios. Our commitment to excellence is reflected in the comprehensive range of services we offer, all managed by seasoned professionals. Utilizing state-of-the-art technology and proprietary tools, we ensure that each project we undertake meets the highest standards of quality. This dedication has positioned us as the preferred choice for major studios around the globe. Our portfolio boasts an impressive array of blockbuster movies and acclaimed television shows, including, but not limited to Thor, Love and Thunder, Black Panther, Wakanda Forever, and Stranger Things. We have had the privilege of collaborating with esteemed names such as Disney, Marvel, Netflix, and Warner Brothers, among others. Our team's unwavering dedication and ingenuity have enabled us to tackle challenges head-on, delivering results that exceed expectations time and again. Recent highlights at Digikore, some of the new things that have taken place out here. Obviously, one of the most important things is the strategic hiring of senior talent across Canada and US. I'm glad to announce that we have onboarded seasoned professionals like Jason Sperling, who joins us as Creative Director and VFX Supervisor, bringing with him a wealth of industry experience and a strong network of connections. For most of you who don't know, Jason's last role was head of VFX Netflix US and Canada. He comes in with over 25 years of experience in the industry, highly respected individual in the industry, within Netflix and outside Netflix, and obviously we get to immensely benefit from all of the connections that Jason brings along with him to the company. The other person whom we are really excited about is Marina Abraham. She's joined us as executive producer. With over 17 years of industry experience and a track record of working on exceptional visual effects projects, she brings in tremendous value to Digikore. In her last role, she was visual effects producer at Star Trek for several seasons, and thanks to her efforts, we've already started working on the Star Trek universe, which is a huge big breakthrough for Digikore, and it should lead to substantial revenue for many, many years for Digikore. David Crawford joins us as head of studio in Montreal. With 3 decades of experience in VFX and a portfolio boasting blockbusters like Titanic and Spider-Man, David's innovation, approach, and management expertise will play a pivotal role in driving our growth. Obviously, we have many more hires at junior levels, but these are the 3 key hires and 3 key driving forces for Digikore who are going to be leading the growth of Digikore North America over the years to come. While these hirings have been recent, we expect the impact, obviously, like I said, to be significant in the near future. Furthermore, we are proud to introduce, which is our most, we've been really excited about the platform, which is Digikore's cloud-based platform for rental of virtual production sets. We have launched, I'm really happy to inform that we have launched the beta version of vpsets.com, that is www.vpsets.com. We have, as we speak, we have 20 potential customers as beta users of our website. We are in touch with over 300 potential customers of our website, and this service is the first of its kind in the world. In fact, this would be the first endeavor where anybody is making to convert a service into a SaaS-based that really gives us a huge advantage over anybody else in the world, not just in India. It goes without saying, our commitment to innovation is our investment in research and development. Digikore is among the very few studios in the world that invest substantially in R&D, because we do believe that R&D, while many people think it's a waste of money, but we strongly believe R&D is the thing that is our edge, and that's going to take us way ahead of most people in the years to come. Turning to our financial performance, in FY24, our standalone performance showed significant growth across all major financial metrics. Compared to FY23, total income increased by 33.08% over FY23, rising from 35.8 crores to 47.2 crores. This boost in revenue reflects our successful market expansion and operational improvements. We must understand one thing, that an IPO is not magic. It's not that you do an IPO today and you start doing double and triple revenue in 2 or 3 months. It obviously, our investments are in the right place. And one good thing is, yes, we have growth over FY23. FY24, FY25, FY26, our investments that we are making in the right places, in the right expansion programs, are going to bear fruits in the months and quarters to come. Our EBITDA has more than doubled, reaching 15.29 crores, a 104.35% increase from last year's 7.48 crores, highlighting our enhanced operational efficiency. The EBITDA margin also saw a substantial rise, improving by 1127 BPS to 32.30. Our PAT nearly doubled, growing by 118% to 9.55 crores, with the PAT margin increasing by 789 BPS to 20.19. Our consolidated financials for FY24 are equally impressive. Total income up by 33.83%. From 36.92 to 49.42. The EBITDA grew significantly by 118% to 15.28 crores, reflecting improved efficiency across the board. This resulted in the EBITDA margin of 30.92. Our PAT also saw an exceptional increase of 144% over FY23, reaching 9.53 crores. So as we've seen, if you're comparing FY23 to FY24, there has been substantial growth already. And as we look ahead, we are looking at these numbers growing at a much faster pace, because then the effects of the investments that we are making into US and Canada will take place. Majority of these numbers that you see in the results now, if these are not really from the effects of the IPO, it is just too soon for the effects of that investment to take place. I believe the effects of those numbers will start showing in our FY24-25 results, and we are really excited about that. So again, welcome all of you, and now I'm leaving the floor open to the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshita Kabra from PKD Advisors. Please go ahead.
Hi, Abhishek. Thanks for the opportunity and congratulations on your results. I was just wondering, first was, can you give us a split between the VFX revenue versus the revenue that you generate from the shows that you also produce?
We already actually split that up. If you see in our profit and loss, we currently put the OTT revenue as other revenue.
Okay, great. All right. So that number is 2 crores. That's all that is.
2 crores odd, yes. OTT, we started the whole process of OTT. So I have only 2 shows up online right now, 16 episodes. But the projections for 24-25, you set the base now. And we are looking at very healthy double-digit crore numbers for 24-25 from our OTT business. Because this is the first year testing the waters. We couldn't, do too much. But yes, now is the time when we take this up and scale it.
Got it. And secondly, in terms of the revenue, on a sequential basis, we have moved from, and I'm only looking at VFX right now, from 24.8 to 22.4. So there has not been a significant increase there. And we have about 450 employees, which seems to be some of what our competitors also have, with a much substantially higher revenue. So how do I read into that?
With a much substantially higher? Sorry, I didn't get you. What's that?
The revenue. The same employee count, approximately the same employee count of 450 people, and a revenue which is almost double what our revenue is.
Honestly, I can't compare with others, and that's not right for me or you to. You can compare, obviously, but I cannot compare with others. They must be doing something differently. We are doing something differently. We are able to achieve this with the numbers that we have in terms of employees. We haven't really seen what they do and why they are able to achieve much higher numbers. We are, and we do believe, so today you are comparing us with just a listed entity, but when we compare ourselves with the industry at large, we are very much in line with what the industry at large, which would include not a comparison between just 3 companies, but comparing Digikore with probably 20 or 30 other companies in the industry. So I would suggest, if you can do that, it would be a better picture. So when you compare, it's always better to get a larger pool of people to compare.
No, so it's basically what is available at my disposal, Abhishek.
I appreciate that. Yeah, I completely understand that. So when we also compare, but see, for us also to compare, we have to compare with the industry, right? There's an industry standard. So we do believe that we are very much in line with the industry standard.
Got it. And the lack of sequential growth, Abhishek, what can we see into that?
2 reasons. So every business has, there are many businesses which are seasonal. So today let's look at an air conditioner brand or an ice cream brand. The first quarter would be the strongest. Summers, after that every quarter would be weak, but it's seasonal, right? You cannot expect an air conditioner brand to deliver second quarter better than first quarter. It's impossible. Same way, in the visual effects industry or the filmmaking industry, the 2 things that have affected our H2 revenue, not too much though. We've tried to do our best to reach where we are. But yes, 2 things did affect us. 1, the strikes, which everybody knows that it was there. And 2, in general, if you look at it, the H2 in the film industry is historically weaker than H1 because H2 mein November 20th, November 25th onwards after Thanksgiving, the industry goes on a standstill. Okay. Majority of the people then come back to work, early January, which is a very standard thing. US and Europe, everybody knows it's closed. Filming does not happen. New projects are not really taking shape that time. So when you're looking at most studios shutting, not doing too much work at that time, it's standard because you're losing literally a month and a half out of 6 months on a slowdown period. So it's not about this year, for that matter, even if you dig into financials of most, companies in the film industry, or even many IT companies for that matter, you will see H1 is always stronger than H2 when they're especially working with US and European markets. Got it.
And the onslaught of the pent-up demand, are you seeing that already, or that is not yet started coming?
We are right now, I would say, very conservatively, on a very conservative level. We are in talks with productions which have total VFX budgets of over $50 million. So productions are already on floor. We've already started getting in quite a bit of work. Like I said, we've already started getting work from Star Trek, which is one of the biggest wins for us this year. So it has started coming in, but I would really say the full-fledged effect of the the strike. And because a lot of productions are in process right now. In our industry, it's the pre-production that takes place first, then the production, and we come last in the chain of work, right? So many productions are on floor, and we estimate the VFX boom to really start from late June, early July. Boom.
Got it. Perfect. I'll come back, Abhishek. Thanks a lot.
Sure.
Thank you. The next question is from the line of Imran from Lobo India Capital. Please go ahead.
Yeah, hi. Good afternoon, gentlemen. Thanks for the opportunity. I will start my questions on the balance sheet first before I move to the other things. My first question is on the receivable part. You mentioned in your commentary that you have not seen impact of IPO proceeds as of now in your business. However, your revenue, receivables tells a different story altogether. About 25, almost all of the money is into receivables. So how would you grow then if all the money is into receivables? You don't have cash. How do you grow in the next year?
No. I don't understand. When you say all the money, which money is into receivables?
So it's roughly about 25 crores, right?
That is correct. And that is also the reason for that is, let me tell you now. Okay, so September is when the strikes open. October, November, this year obviously December, a lot of filming happened. When most of the work actually came to us, so December, January were little weak months for us because a lot of filming of post-strikes were happening out there. Tons and tons of work for the last 6 months. Majority of them has come to us between end January, February, March. So that's why they're yet in receivables, because our average payment terms are anywhere between 60 days to 90 days. So while a lot of the work, yes, it is, I'm not saying it is troubling our cash flow, but yes, it does, hamper the cash flow to a very large extent. But we are managing. It's not that we are in any state of cash flow issues. We are pretty comfortable on our cash flows, and we are confident of seeing this through the receivables that are there.
Right. So this also indicates that you have started collecting, and you must have collected.
Obviously, collections have started. Collections have started. But it's not that the entire 27, 24, 25 has come in, but collections have started. And I must tell you one more thing. It's not only us, right? So these larger studios who've been impacted, and that's a fact. The larger studios who've been impacted by the strikes, who's to pay in 30 days is now paid in 60 days. Who's to pay in 60 days is now, because even they are trying to figure out their cash flows. As an example, Tippett, filed for bankruptcy. So people are struggling in the US. See, in India, when you have closures of 2, 3 months, 4 months, because of the lower cost of operations, we are able to manage. But out there, a 100% VFX company, it's a few $1 million of outflow every month.
Right.
So just the scale of management is very large.
Right.
So the entire industry is struggling with cash flow right now. It's not only us, but everybody is managing. We, as us, we are also managing the cash flows pretty well, and we don't see this as an alarming issue.
Right. The other question, I'll club maybe all the questions on the balance sheet now because of the paucity of time. See, I think you have a lot of capital work in progress now, from 2 crores to it is now 6 crores. Intangible assets, I can understand you have created this, platform. So that
That's
must
right.
be that. So 6 crores, this is an addition of 4 crores in the work, capital work in progress. Then there are some other current assets which have gone from 2 crores to 6 crores. Some short-term loans and advances again gone from 2.5 to 4.8 something. So net about 8-10 crores impact. So can you tell us what all these are?
Okay, so this I'm going to let Surekha or Srinivas handle because they are the finance people.
Okay, so
I think they'll be in a better position to answer that, honestly.
Then maybe later they can answer these questions.
Sure.
The other question that I have is, or maybe this is a clue to the current question. Your employee cost has, I don't know why it has reduced, and then the other expenses have gone up slightly. So just trying to understand what is happening here.
No, other expenses also include towards our Canada and US operations.
Right.
So that is there. Obviously, the team in India, because of January and February being slow, we are not at 450 today. We are obviously much lesser than 450. But we also, it didn't make sense in January, February for us to when we saw after the strike. So we did reduce some manpower, and that's why you see the effect out there. But it's not like 450 se 100 pe aa gaye. It's a slight reduction, even in terms of manpower. But that's a good step, right? Because we're trying to save on cost.
Right. And just one last question, and then I'll move to the queue. I wanted to know how many people you have in Canada now.
So it's not only Canada, it's US and Canada. Yeah. So we have a total of 1, 2, 3, 4 senior people and 1, 2, 3, 4, 5, 6, 7 artist level people.
Okay. Thank you. I'll move to the queue. Thanks.
Thank you.
Thank you. The next question is from the line of Vivek from Shanti Financial. Please go ahead.
Hi, Vivek.
Yes, thank you. So we have these wonderful results from your firm, and my first question is, do you see a similar trajectory or a better trajectory of growth in the next 2 years? And the second question is, how would you position yourself? Because as you said, there are many set of equal players in the market, but there are 3 companies that we kind of look at in the listed space in India. How would you position yourself as unique? The VP Sets is a very beautiful solution that you're bringing in the SaaS space. But apart from that, what is the positioning of Digikore which is unique, which compels customers to look at you? Thank you.
Brilliant. I'm going to answer both your questions. First is, we are very excited and confident of maintaining a similar growth trajectory. In fact, in the revenue side, our growth trajectory is going to be much more than the difference between 23 and 24, because we're going to start seeing revenue from Canada as well. So on a consolidated basis, the revenue projections are definitely much more in terms of growth numbers.
Okay.
Now, talking about the difference, I'll be honest with you. When you come to VFX, it will be very stupid for any company in India to say that I'm different from the other, because everybody is the same.
Okay.
There is no major difference on the VFX side. Now let's talk about as a company. I'm a huge fan of cricket. 10 years back, a batsman and a bowler were given, the main advantage, but today an all-rounder is. An all-rounder is invaluable. We've seen that in sport. We've seen that in, general. The perception has changed. Digikore is an all-rounder, and Digikore is the only all-rounder in the visual effects / entertainment space in India. One end, we have visual effects, where we are going extremely fast, embracing technology among the forerunners when it comes to integrating AI with visual effects. On the other end, we have vpsets.com, the first of its kind and the only platform in the world for renting of virtual production assets. So technically, we have been able to productize a service which is a huge benefit for any company. And on the third side, we have production of content for production of branded content. So it's not really production of fiction content. We do production of branded content, which is a very unique business model by itself. And I'd be surprised if there's anybody else in India using our model in production of branded content. Why we do this? There's a very valid reason for this. Visual effects is, at the end of the day, it is a service-based industry. We are doing project-based service. A project-based service will always have little ups and downs. It's very rare that, you have every month you have new project. There are times when you have, let's say, a week, 10 days, 15 days of, little lesser projects. We've had times when we've had to refuse work in 1 month, and next month we've had 10 days free. But that's the way it is. It's a project-based business. We needed some things to stabilize this, to ensure that we have longevity as a company because of AI also coming in. And that's when we started working on, VP Sets almost now 2 years ago, the content maybe 12 to 14 months ago. And we are seeing the fruits of these early decisions that we took. And I can proudly say that today we have ensured longevity for Digikore. Whether there is AI disrupting VFX or not, nobody knows. But even if it does 1%, I think we have safeguarded and protected Digikore as a company for many, many years. We are among the very few animation and VFX companies in India
who has survived 24 years. You can, just whenever you have time, you can go through a history of VFX and animation companies over the last 15, 20 years. You find 2 or 3 out of the 200 who survived 24 years. Because we've always innovated. We've come out with new areas of revenue within the industry to ensure that we are not impacted by new technology that disrupts the business.
Any projection for the industry's growth? I'm talking about the Indian industry, which is catering to the global marketplace. Any projection or reports, industry reports that we can refer to?
I don't have those figures, so I cannot comment on that. For Digikore, it's a very simple goal. The global VFX industry is $10 billion, and we want a small pie of that. Our immediate goals over the next 3 years is to grab $25 million out of that, which on a very logical sense for a company to have approved, who is approved by Disney, Warner, Paramount, Sony, and all of the majors, to grab $25 million pie out of a $10 billion market is not very difficult. So our goal is that we are focused on achieving our goals.
25 million in how many years?
In 2 years' time.
2 years, okay. Thank you. All the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ankit Podar from Reflex Industry. Please go ahead.
Hello. Hello, Abhishek.
Yes, Ankit. Hi.
Yeah, hi. I just want to ask 2 questions. One is the financial results which you have now in your website of the company, Digikore VFX, it's not uploaded. So I think corporate governance is important. So one is it's not uploaded. Second is
we just uploaded that to NSE like 45 minutes ago. It will be uploaded
as a company, as a good policy, I think we should upload on the website also.
Which will be done today.
Yeah, and the second thing is, in your cash flow statement, in your P&L account, I'm seeing that there is a tax expense relating to the profit of the current year and also some deferred tax and tax of earlier periods. But in your cash flow statement, you are showing tax paid as nil. So I think there's why is there a discrepancy like that? Direct tax paid, definitely company will have some advance tax or TDS. And if there is something shown in P&L, that is why is not getting reflected. Second point. Third point is, I've seen from your balance sheet that your intangible assets have increased from 32 crores to 32 lakhs to 263 lakhs. But your depreciation has not increased proportionately. Depreciation is just increased by from 103 lakhs to 118 lakhs. Why is there, such an increase in intangible assets, but depreciation has not increased? That's all.
So that I would leave again to Surekha or Srinivas to answer because they are better at answering that.
Yeah. Hello. Just to explain you, the second point which you asked about the increase in the fixed assets, but not increase in the depreciation. So actually, you see that increase into the CWIP, that is capital work in progress. So that is not capitalized, and so maybe that.
No, I'm telling fixed assets, not capital work in progress. Fixed assets. Your intangible assets have increased from 32 crores to 263 crores.
No, not 32 crores to 263 crores.
32 lakhs to 263 lakhs.
Yeah.
Lakhs. Yeah. But so almost it's like 9, almost 8.5 times. But depreciation in the profit and loss is from 103 lakhs to 118 lakhs. I mean, it's just 12-13% increase depreciation. Why?
If you see that capitalization, what you are saying from 2 crore 63 lakhs to 32 lakhs, that is because that capitalization has been done in the latter part of the financial year. That's how, and that depreciation will definitely be proportionately on that part only, that period only.
Okay. And the cash flow thing?
That cash flow thing, I've just checked that, and if it is done, we will update that definitely. If it is because we have the tax flow, and in the tax profit and loss account, we have the advance tax paid, and we also had a deferred tax liability. So we recognize the deferred tax asset as well there.
Okay. Thank you. Thank you very much.
Thank you. The next question is from the line of Shripal from HNI. Please go ahead.
Hello, Abhishek.
Yes, hi there.
Yeah, Abhishek, I just want to know, I just saw the cash flow. So, in regard with the working capital, I can see the receivables are piled up, and but there is also an increase in borrowing. So, what is this long-term borrowing all about? If you can just tell us.
So we got an increase from our bank on the CC limits that we enjoyed. So that is the long-term borrowing that you're talking about.
But that will come under short-term borrowing. But do you have a vision of repaying this loan or keeping this loan as it is like that, or you want
No, obviously not. See, our cash flow, as you can see, because of the receivables from our clients, they are obviously as we are receiving money, and that's a working capital, right?
So as investor, we would like that there should not be any borrowing.
Even as a company, we would like that there is no borrowing.
Yeah. Okay. Secondly, I just wanted to know the market share currently which we hold and what is the competition in the market and where we stand. Just a brief, I know you have discussed this, the global market size and all this, but currently where are we standing in that, and what is our immediate target in the next year?
Currently, where do we stand in the global market size in terms of revenue? Obviously, we are minuscule. We've primarily been an India-based studio doing revenues of, $6 million, $5 million. The small boutique VFX studios in the US do that much, right? So if you look at the global perspective, we are minuscule. But now with the expansion that we've already started with the hiring of the teams in North America and the US, and with our wholly owned subsidiary active in Canada, we definitely, I wouldn't say never. It's not that we can't become a $100 million company. Yes, we can. But like I said, our initial goal is 25 million, which would position us as a small to mid-sized VFX studio, or mid-sized VFX studio in the US. So our first goal is that, and all the steps that we are taking is to achieve $25 million revenue within 2 years' time.
Okay, great. Last question. So I saw your half-yearly results. So half-yearly results are little bad than the quarter H1. But do we have this season every year, or is it only for this year that we see H2?
No. So I tell you, there are two reasons why the H2 results are lower than H1 results. Both of them are...
You mentioned this earlier in the call, but I just want to know whether it will be like this every time, or this year was anything specific?
Yeah, I'll tell you, historically, Digikore has seen H2 weaker than H1, but I'll tell you how it goes now. Let's say in H2, I get we are project-based, right? Now, let's say H1 I get a project in July, which is like, let's say a 10 crore rupee project. I can't go and tell the client, yaar, meko 5 crore H1 mein dena, 5 crore H2 mein dena, because H2 weak ho jayega. Or vice versa, right? It's a project. It's not something like, I'm in the retail industry. Aaj I have got 100 distributors. Now tomorrow next quarter I've got 110 distributors, 120, which is a linear growth. In our case, it could be that, one quarter I get a crazy project and next quarter is weak. But then, unfortunately, that's not in my hand because it is a project-based business. But to answer your question, historically, H2 has been weaker than H1, at least for Digikore. I don't know other companies, but it's just that the industry is that way. And if there are times, yes, there have been times when we've got a fabulous project in H2, and that time H2 has taken off. But that's, again, it's a project-based, like I said. Coming back to H2 for this year, Our top line hasn't taken such a big beating, but our bottom line has, and there's a reason for bottom line to take this beating because of the salary investments that we have made in US and Canada over the last 5 months, which has mainly been in H2. The results of which will show. It's not that today I place a person or you hire a person in your company and from the next week onwards, the revenue starts flowing behind that. It is a period. So if we have taken a beating on our PAT, it is a temporary beating, not because the business has gone bad, not because our margins in general have fallen, only because of the one-time extra expenses we have had for our teams that we have set up in US and Canada.
Okay. If such a thing happens, I think then the board should consider whether it should be shown as an exceptional item or not. That I think you can do it like that, so that by seeing the financials in the P&L, the H2 is the PAT is like after H1. So it does not look correct. If it is in the exceptional item or if it is a one-time expense, then probably we get a better understanding of the P&L and we can understand ourselves.
But I'm not a finance specialist over here, but just for my knowledge, if we didn't show that as an expense in India, which we have technically, and we showed that as an exceptional item in the India balance sheet, but in the Canadian company's balance sheet, then that would come as an expense, no?
Yeah, it will still part be of expense only, but if you show it as an exceptional item, we can consider every year that...
Then you show it as an exceptional item, and then obviously the PAT... The PAT goes up accordingly. But yeah, but this is a one-time affair which had to be done. The whole purpose of the IPO was to grow and get that team in place out there. When you set up new teams, the results will take 3 to 6 months to show.
Okay. That's all. Thank you.
Thank you.
Thank you. The next question is from the line of Gaurav Sachdev, an individual investor. Please go ahead.
Hello, I'm audible?
Yes. Hi, Gaurav.
Yeah, hello, sir. Sir, although you have already given the reason for the low bottom line in H2, but I want to ask for the FY25, as in 2-3 months before in the Arihant Capital Concall, you guided for 25% start margin for FY25. Are you still on it?
As of now, we haven't moved out from there. So as of now, it's too early for the full financial year to comment on it. Definitely, I will be in a better position when we are at H1 FY25. But in the month and in the period gone so far in the year, there's been no change in that, in our plans for that.
And what about top line, sir? What is the expected top line in FY25?
Top line, our internal target is 100 crores, but to be very, very honest, we are, like I said, our internal target is 100 crores, but anything between 80 to 100, I think so we would be doing exceptionally well, because 80 would be close to 100% over FY24.
Okay. Thank you. That's so much, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Sandeep Dixit from Arjav Partners. Please go ahead.
Thank you. Just a clarification. If I look at these numbers of employee benefit expenses, the first half it was 6.96 crores. It has actually fallen to 5.05 crores.
So I did mention that we did reduce some people in the December-January period because of the impact of the strikes, right? We were carrying a cost that time, and it is natural for a business to take a call and reduce the team when the work is thinned down a little in that period.
Okay. So is this also related to the jump in technical subcontractors, which has gone from 2 crores to 5.35 crores? I presume you took them off the rolls and hired them as consultants.
Many of them, they were off the rolls. They were taken as, what do you call that? Consultants, just for their profit. Yeah. And then obviously there was some subcontracting also done when the work suddenly started coming in. So that is why the technical subcontractors has gone up.
Okay, thanks. The next question is, you mentioned $25 million as your goal in 2 years' time. So is that FY26 2 years or FY27 2 years?
FY26.
Okay. Last question is, earlier call you had mentioned that your PAT margins will be 30 to 35%.
No, I'm sorry, sir, but I don't know if I don't have recordings of any calls, but in none of my calls we've ever mentioned the PAT margins as 30 or 35%. Never, ever. We've always mentioned the PAT margins to be between 24 to 26% and endeavor to increase that by a percentage or two, but we've never ever discussed 30, 35%.
Okay, so maybe I got this wrong, but I think this was a discussion regarding the direct work. You had mentioned that you aim to get to a mix of direct projects of about 50%.
For this year, that is our target, to have at least 50 to 60% of direct work compared to outsource.
Okay, so that 25% PAT margin you are guiding right now is based on a 50% direct projects, right?
Because our expenses, if we were only India-based with no major overheads in the US and Canada, and if my direct work grew from the current, let's say, 25 to 50%, my PAT margins would go up to 30, 35%, correct. But what is happening is that even though my direct work ratio will go up, but my overheads, because of the high salaries in the US, have increased. So that will offset the PAT margins and yet keep the PAT margins yet in the 24, 25, 26% range.
Okay, that's good. Thank you. I just wanted to clarify that.
Correct. Thank you, sir.
Thank you very much.
Thank you. The next question is from the line of Tushar Sarda from Athena Investment. Please go ahead.
Yeah, thank you for the opportunity. I want to understand your business. So you said it's a project business. So do you bill on completion of milestones or do you bill on manpower basis? How does the client give you the work?
No, billing is never on manpower. When we get, let's say, a job which could be anywhere from 10 shots to maybe 500 shots, 700 shots project, we estimate the cost. We send them a quotation, not in terms of man days or anything, a quotation. Let's say shot-wise. This shot is going to cost $1,000. This shot is going to cost $500. This shot is going to cost $60,000. So if there are 500 shots, there are 500 Excel line items with a cost for each shot. It really depends now when you're talking about milestone-based or, at the end of the project. There are various factors in this: client, value of project, a type of client, whether direct client or, or outsource work. So this is not one size fits all. If the project is, we typically see if the project is over, $40,000, $50,000 or $70,000, then it will take milestone based. But honestly, milestone based bolne ki baat hoti hai. Let's take a client like Apple. We just did a show with Apple. With a client like Apple, Disney, there are 20 levels of approval that they need. While the contract may say 50% or 30% on award, 30% after delivery of X number of shots, and 30% after that. I have seen where we've delivered 80% of the project and we're yet waiting for the, award. It's 30% on award money to come. They have too many levels of approval. So these are all very good things to say. And we're not in a position, because see, these are all time-bound. The TV series, the film, these are all time-bound, right? They have release dates. So everybody is under tremendous time-bound pressure. So I cannot tell them, bhai, you give me my 30% advance, I'm not starting otherwise. But most of the industry does work that way. So it's a hypothetical situation to say,
No, I'm not on payment. I'm asking how do you book the revenue? You will book the revenue only on completion.
It's not mandate based. It's not mandate based. It's not hourly based. It's a pure cost that we give them based on our calculation of how many man-days are being used and what is our man-day rate. We multiply that, but they don't know the internal working of that, obviously.
So you book based on work done, or you book based on billing, is what my question is. Because that will impact how revenue comes in the books. You know, it can become very lumpy.
I can't book on what's done, right? I have to book on. So billing,
that's what I want to understand. How I don't know how you do it. So that's why I'm asking.
Billing can be two types. One billing can be when the project is completed, and one billing can be milestone-based billing. So it really depends from client to client and project to project. It's not that every project is at the end of the project we bill, and every project we get milestone-based.
Okay. So two related questions. What is the average size of the project and average duration of the project? A typical size.
As on today, when we look at direct projects, the average size of the direct project we are experiencing is around $150,000 to $200,000 maybe for a direct project. When we do outsource work, let's say a large VFX studio in the US, there is no, it's not really project, we don't get project based. There, 1 week they'll send us a bid, we send them back, awarded. Next week they'll send us more bids, awarded. So there it's mostly, they keep sending us bids every week. There are certain clients that send us bid every 3 days or 4 days. As they keep getting shots, we keep delivering. We work on multiple projects with them at the same time. So to really give you an average value per project that is more relevant to the direct project that we do, where it is around, I would say 100 to 150, maybe $150,000 is a great average that I can consider.
And what time does it take you to complete the project?
Let's say $100 to $150,000 project would be delivered in a month and a half max. If it's a $300,000 project, it could go up to maybe 3.5 4 months.
And you don't subcontract, right? You do all the work in-house, except for the technical people. They are hired, but are they in-house or?
There are times when we also have to subcontract a little. We have verified vendors. It's natural because, let's say, there is, my roto team is full, already doing work. I get another project at that time, which involves roto. So, all VFX studios work together very closely, and that's a very weird industry, by the way. It's a lovely industry because nobody considers each other competition. We all get work done from each other when the time comes, which is technically subcontracting. So a lot of VFX studios work very closely with each other.
Thanks for your answer.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Ladies and gentlemen, to ask a question, you may press star and 1. The next question is from the line of Vedant Sarda, an individual investor. Please go ahead. Hello, Mr. Vedant. Your line has been unmuted. Please go ahead with your question. Hello, Mr. Vedant. Your line has been unmuted.
Hello.
Yes, sir.
Yeah. Hello, Abhishek. My question is about...
Good evening, Vedant.
Yes, good evening. So, my question is about the increase in the cost of technical subcontractors and the decrease in the cost of employee benefit expense. Are they related? Have you...
Yeah. I just answered that sometime back.
Maybe I missed that.
Oh, yeah. So I'll tell you what. So during the period of December, January, since there was, which like I said, there's always a slowdown, A, during that period, and B, the effects of the strike. We had to reduce some manpower. And then suddenly, which is natural, that January end the work comes up, but you don't get manpower like just like aaj phone kiya kal aa gaye. So that is why, and obviously there are some people who were on contract as well. So that is why the reduction in cost of the manpower and increase in the cost of technical subcontractors. So there's also some outsourcing that happens at that time.
Yeah, okay.
And suddenly comes in with a flow, when the work suddenly comes in with a large chunk, it's not that a 100% team that was delivering 100 shots can suddenly deliver 200 shots just because the work has come in a large flow.
Understood. And what about the H1 to H2? Is it maintained? Is the seasonality maintained in the next 2 years? What are you expecting on that?
Yeah, historically, we've always seen H2 weaker than H1.
But again, like I said, nobody can say because I could get a huge project in H2 and this is project-based. And I again explain that, right? When a client is giving me a project, I cannot say that give me half now and half in next half because so that my, H1, H2 looks safe. If a project comes, we take it, right? So there will be years when H1 is strong, there will be years when H2 is strong, but in 9 out of 10 cases, H1 will always be strong.
Okay, thank you. Yeah, I understood.
Thank you.
Thank you. The next question is from the line of Amit Jain, an individual investor. Please go ahead.
Hello, am I audible?
Yes, Amit. Hi.
Hi. Good evening, Abhishek. Actually, I'm not happy with the quality of the statement which you signed and the auditor signed. If we go to the consolidator statement, there is a silly mistake. Like if you see the half yearly, 535 lakh 0.61. Then in September 2023 half yearly, you have just put 212, and then full year is 748. So how to do the mathematical calculation?
Which figure are you talking of in the consolidated?
Consolidated P&L account. You can go to that. Let me take the example of cost of technical subcontractor.
So just give me 1 second. Sorry, I can answer your question only if I see it. So just give me a second. Consolidated. Okay. I'm at consolidated P&L.
So let's go to the line of that cost of technical subcontractor.
Yeah.
You can see here figure 535.61 for the half year ended 31st March 2024. And if you see half year ending 2023, September 3212, rounded off. So how to do the calculation of the full year?
Understood. No, I appreciate that. And that is something which we need to take a note of, and appreciate the feedback on that. That shouldn't have been rounded, and that should have been given in the points, March 31st, 2024. I really appreciate it.
And surprisingly, your auditor also signed. I'm actually surprised. Okay, anyway, now coming back to the technical question. Okay, so that was just a feedback related to the corporate governance. Okay, let me come back to the question. You said in the initial question that you normally your client pays between 60 days to 90 days. Am I right? Normally your client, client payment is basically 60 to 90 days. Am I right?
60 to 90 days, yeah. But now in the last few months, it's not been the same. We are experiencing even 120 days right now.
No, I am not even experiencing 120 days. It is more than 6 months. If you see your revenue, okay, of half year is 22 crore 44 lakh. Am I correct?
Right. 24
crore, okay, let me take other income also, then 24 crore 62 lakh. Am I right? Your half yearly revenue. And your data is more than that, 24 crore 70 lakh. So basically you have the outstanding of more than 180 days, 6 months.
No,
so even if you...
I'm not able to understand your question. Sorry, you have to just repeat that.
Okay. So let me tell, what is your total revenue for the half year in March 24? 24 crore 62 lakh, am I right?
Yeah, correct.
Okay, and you said right now it is stretched and you are getting the payment in rather than 60 days or 90 days, you are getting in 120 days. Am I right? You said this?
Yeah. Yeah.
But if I match this with the debtors, trade receivable in the balance sheet, your outstanding amount is 24 crore 70 lakh, more than 6 month revenue. Am I right?
Yes, because we have debtors. I'll tell you as an example. We have even older debtors. Like let me give you an example of Tippett Studio. Tippett Studio is a debtor of more than 18 months to us just now. They've just declared bankruptcy after taken over by Phantom. So you can't. We actually have certain debtors which are even older than 6 months.
So, but in total number of days, you have more than 6 months. So, have you provided provision for arrest for that? Because it is 18 months?
Sorry?
have you done the provisioning of the bad debts? Because it is more than 18 months.
Provisioning of?
Bad debts.
We can't provision for bad debt right now. They've gone into Chapter 11, and we have got our team in the US for recovery. So how can we put that as a bad debt? If we put that as a bad debt, my Chapter 11 recovery case has no standing.
According to the Indian accounting standard, and in fact, even the IFRS, you are supposed to put the provision. I am not telling you that you put the bad debt in the P&L, but you have to do the provisioning. You can check with your finance team, who is sitting with you.
Okay, I'm going to make a note of this also and check with our CA. But yes, we did discuss about the bad debts side of this, but then that weakens our case against the recovery of that amount. So that's why we did.
No, it won't. It is a standard policy across the company corporate. It is according to the ICAI, according to the company law also. So it won't. In fact, it is a international practice.
Understood. Thank you.
Actually, you are right. But if you see the aging of the all receivables, in that case, if it is required and if it is more than 180 days overall, but that if you go one by one party wise and aging of the billing, then you required to provide. You are generally comparing all the amount with the sales, but this is not the case.
Just a minute, please. Just now he said that one party is more than 18 months. Am I heard wrong?
He mentioned one party only, but not all the parties, because if you...
So that party, have you provided for? This is my question.
No, we haven't provided.
So you are supposed to provide. You just said that, you are supposed to provide, but you have not provided.
But no. Actually, what you are generally comparing, that's why I told you.
No. My question was very relevant. He said because of Chapter 11, it is not provided. I am asking about that, and I don't know who is the auditor who signed off this balance sheet. Because you are supposed to provide, if he is saying 18 months, you also agree 18 months. What is the quantum of that debtor, by the way?
That's around 50 lakhs.
50.
So that's what I'm saying. Point taken. We will discuss this with our auditor and see what you're saying. If it is, if it's a legal requirement, obviously that will be done. I'm not arguing the point. I'm saying point taken.
Sorry to interrupt, sir. I would request Mr. Ahmed Jain to please follow up in the question queue for further questions. Thank you. Due to time constraint, this will be our last question. The next question is from the line of Maruti Nanda Sarda, an individual investor. Please go ahead.
Yeah. Hi, Abhishek. Good evening. Can you hear me?
Yes, good evening.
Yeah, I have a couple of questions. One is regarding your 2-year projections. What you have given is that around 200 crores is what we are targeting, right?
For FY26, that is correct.
Yes, right. So my question is that particular target will be achieved without any equity dilution, or we will be in need of any kind of capital in the form of equity or debt?
Honestly, we haven't given that a thought yet. If need be, we will do it if need be. But as of today, we don't see a need for that. So I don't think so this is the right time to answer that, whether we need it or we don't need it.
Okay. My second question is regarding data. That, the number is 24 crores at the end of the March. So, we have already passed almost 2 months from March end. So what's the recovery out of that 24 crore?
So we have recovered. That's why we are here surviving as a company. Recovery is there. Obviously not.
Can you just put a number to that, because that will answer a lot of questions.
Honestly, I don't have that number right now. If you want to connect with me offline later on for that, I can, because we didn't keep that number handy.
Okay. All right. And my last question is regarding vision. Like 5-year vision of the company, how do you see, where do you see Digikore standing in the world map as far as VFX and the other things are concerned?
So our vision right now for everything that we are doing is limited up to 26. Why? VFX is right now at a cusp where we don't know how AI is going to impact it.
what is good, whether, the writers, AI has been barred to be used, in writing of films, whether it's going to be barred in VFX, not barred. MPAA, that's the Motion Pictures Association of America, and the studios, they take a lot of debates and discussions. We are waiting and we are seeing it unfold. At the same time, like we've discussed earlier also, we are taking our own steps to ensure that Digikore as a company is supported by multiple streams of revenue within the industry or related, businesses within the entertainment industry. So, assuming for any reason if, AI disrupts VFX, and in fact, by the way, we are embracing AI. We are not against AI. We are not the ones who are scared of AI. We are the ones among the few studios who have embraced AI. There's going to be a very interesting announcement from Digikore on the AI front as well. I don't know if many of you have heard of Sora. We've been able to crack our own version of Sora. So there's going to be a very interesting announcement on the AI front as well within the next couple of months from Digikore. So far, all our plans and projections are up to FY26. So maybe once we are halfway through this year or a little more, we will be able to give you clarity on maybe 27, 28, 29, 30 as well, maybe.
Thank you, sir. Ladies and gentlemen, due to time constraint, that was the last question for today's conference call. I would like to hand the conference over to Ms. Chandni for closing comments.
In the conference call of Digikore Studios Limited. If you have any queries, you can write to us at research@kirinadvisors.com. Once again, thank you for joining the conference.
Thank you, everyone. Really appreciate your time.
On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.